Okay, hello everyone, and welcome to this live intraday strategy session on SB Trade Desk. Good to be with you guys here today. Stefan, I love the positive attitude, man. Good morning to you. Terrence, great to see you. Permendra, JD, good morning to everyone in the room. So, it's been a very interesting 24 hours to say the least. Obviously, yesterday's FOMC interest rate decision was sort of the highlight of the day on the back of the weaker GDP data. You got a little bounce in the dollar right off of a major key support level, and that's basically 11,737. Now, the actual low was 11,739. Grant me a 2-pip allowance there, but that's still going to be the near-term support for the index. A couple of things I wanted to talk about real quick, guys, just to overview yesterday's FOMC interest rate decision. Look, there's no major change, and the way that the market interpreted it, I think via price and also what you're seeing on the headlines and what you're seeing in the broader financial publications is this. Yes, there is no change as far as the expectation for when the Fed is going to move from the markets, in that you didn't see them. Well, first of all, it was a unanimous count, so there's no dissension. They're all basically on the same page. And also, there's a little bit more of a cautious stance. The way I've been looking at it and the way I've been telling it to you guys here, again, there's going to be a very, very hard case for them to start moving on rates in the near term. Why? You have, obviously, some headwinds from what's going on over in Europe. You have global central banks which are still in their easing cycle. You have a stronger dollar, in which case, once they do hike rates, that'll only propagate or further exacerbate that strength. And we've already seen that start to filter onto corporate earnings and the like. So, long story short, it doesn't look like there's any imminent rush, but my contention is still that we really won't see the Fed do anything until minimum December. I'm much more in the camp of 2016, but that's just my personal opinion. So, we're not here to discuss fundies. What does price action say? What did the reaction say? Well, as we said on Monday, if you guys remember, or on Sunday, on the Sunday update, on the on the scalp log from last week, we're basically looking for the dollar to have made to put in this near-term low on the back of the FOMC, and that's basically what we've gotten. We've gotten a nice drop into the lows that you made for January, that swing low. The February solid low is exactly right at that retracement, 11,737. You had the swing lows that you made here in March after the breakout. You had median line support. There was a whole lot here. So the break here, finding some support, may get a rebound. You could get as high as 11,880 again. That would take us right back into this region. But this is going to be the near-term bearish invalidation. So as long as we come into this region, you're looking for short triggers, you're looking for short entries on the way up. Only a breach through this would suggest that we might have a round trip to make right back into median line resistance. So I'm not really looking for that as the scenario per se. But near term, you do need to respect this little bit of a bounce here. Keep in mind a couple of things. How many days have we seen consecutive declines for the U.S. dollar? Here's what it looks like on the consecutive bars indicator. Okay, at this point, we put in 5 consecutive down days. We looked at this a couple of times this week on a couple of different pairs. It's been quite some time since we've seen a decline of that magnitude. The last time we saw a 5-day decline was right here. It was followed by just a 2-day rally, okay, so kind of mimicking what we're expecting here, a near-term pull higher, before the continuation. So by no means is it going to refute the broader downtrend. There's no means it's going to tell us that the correction is over, but near term, you do want to kind of be cautious. All of this is trumped by the fact that today's the last day of April trade. So for those of you who've been with me for a while, I'm very reluctant to trade on these kinds of days. JD, as it pertains to your question, on days like today, I typically I'm sitting on my hands. The first day of the month and the last day of the month typically for me are just not strong days for scalping. You have a lot of flows, end-of-month flows, portfolio rebalancing that will tend to skew intraday price action. Triggers sometimes aren't as solid. That's not to say we definitely won't take any positions, but I definitely come into the end of the month and the start of the month with a much more reserved level. So any scalps we do take today, we had a great performance yesterday. I don't want to mess it up, so we'll be very, very light as far as the leverage is concerned. So we'll keep an eye on. Stefan says it's a good day to work on charts. Every day is a good day to work on charts, my friend, but I definitely agree with you. On days like today's, prudence pays, and it'll at least in my personal experience, tends to be a little bit more of a shaky day as far as the intraday trading is concerned. That being said, let's jump into the scalps. Let's jump into the setups that we've been following on SB, and we will take a look on where we are. So the first things first, the Aussie dollar. I'm not really a big fan of it here. I didn't take any positions on this one on FOMC. Most of my concentration was actually on the Kiwi. I gave you guys an update on that as well last night, but we'll look at that in a moment. Here's what we're looking at in the Aussie dollar for yesterday. Before we do, here's what the daily chart looked like yesterday as well. The major key resistance here is going to be that 80.67 level into that highlighted region. Okay, 80.67 being those low day close they made early in January. Also, a longer dated median line formation for the current operative pitchfork was almost a perfect tag on that stretch yesterday. So right off the bat, we've been on the long side of Aussie. 78.80 break was the invalidation level for any type of short exposure. You're looking higher. Now we're at major key resistance. Dollar is showing some support. Look for a little bit of a kickback. Okay, and there's the kickback. A little bit bigger than you want. Let me take that back. Right back into median support. So you're right there. Chintan says Euro Aussie gives 5-minute short triggers just now. Can you please check? Sure. Let's jump in. Let me see what you're looking at. Divergence into the highs. Okay, hasn't given out just yet. And let's see where the broader trade is. Sorry for the segue here, guys, but if a trade is coming up, I want to see if I can get you guys into something. There's been a lot of positive feedback since we took some of those trades last week, so let's see if we have anything here. Remember, guys, just to, again, JD, just to comment on your question earlier, he's saying it was very helpful when we took those trades during the webinar, and it's going to be something that you guys would love to see more of. We don't choose when the trades play out, right, guys? We need those triggers to pan out. You have to be in a sort of trading mentality when you're doing that. It's very difficult to do that as we're discussing setups and taking questions. We'll do our best, but it's important to note that we use the opening ranges for the U.S. for validation as well. So sometimes, the 8:30 slot as we're getting started is not actually the best time for us to be taking fresh trades. That being said, we're always going to be on the lookout. So here's the broader setup. Again, I haven't updated these charts, so I do need to take a look at where we are before we jump into the position. We're basically looking at a simple 618 retracement from the decline off the April high. So I do like the fact that you're looking at resistance here on Euro Aus. The daily chart, I think I may have tweeted this earlier. I was talking with someone about this. I think, Mark, you were talking about this. The video is flashing back and forth. Oh, thanks for telling me, Eileen. That's the Bloomberg terminal. Bear with me 1 second, guys. All right, sorry about that. So, long story short, I do like the resistance right here off 141.60, which is, again, that basic 618 retracement. So you're on the right track. Do we have the trigger for the short side of the trade is what I'm interested in. And I don't think you do yet. Okay, I don't think you do. Remember one thing, Chintan. Whenever you're trying to fade a move or you're trying to take the opposite direction of the breakout, you really want that validation signal. Okay, it's very, very important because you're going against the counter trend trade, right? Mark says, no, okay, gone now. What are you talking about there, Mark? Oh, the flashing. Okay, cool. Thanks for that. So I am looking lower. I do think you have a divergent signal here. A stop against 41.67 is pretty tight, 30 pips. A quarter of the daily ATR is what on Euro Aus at this point? It's 44 pips. Yeah, that could be a decent scalp. That could be a decent scalp. A rule of mine typically, Chintan, is that I'll never take a short scalp while momentum is above 70. So again, based on that premise, my personal rules, I can't get involved just yet here. If that trigger had given out in the 5-minute chart and then you saw momentum break below 30 or momentum, not 30, 70, or momentum was below 70, that's a trade I'd be interested in. But remember, when things are overbought like this and they're in the stretch mode, momentum can find support at 70. Okay, in which case this is just the low point of a bounce and it moves higher. It can stay up here all day, all week, all month. Nothing says it has to come back, but it's the act of coming back that gives us the trigger. Does that make sense, Chintan? I want to make sure we're on the same page with that. Let's see this trigger here. Let's just redraw it. Take the low in price. You know what I mean? And also, guys, keep in mind a couple of things. You know, the duration of the time period that you're looking at is very important. I know guys who are on the desk for years that scalp for 5 or 6 pips. Not my style of trading, but for them it works. On those guys, they'll take a resistance bounce like this super tight, right? And they don't care if it yields 15 pips or if it yields 10 pips. The point being, I'm sorry guys, my mouse is on the fritz here. The point being, yeah, you could get a downside break here that'll shift it, but if you're going by our strategy, a 44 pip hit against the high here is too tough for us to try to fight while we're in overbought condition. So just keep that in mind. He says I need to wait a little more before jumping the gun. I mean, listen, if the trigger is there, we take it, right, Chintan? I'm going to go over a couple of trades with you today. Hopefully we'll get something. Euro Aussie 30-minute RSI is over 70. Thought, should we wait? We shouldn't trade when over 70, says Stefan. You took the words right out of my mouth. I wish I saw that question earlier. So yes, Stefan, you're learning quick, man. That's exactly what down the lines I am. You know, it could be the biggest fake out. You'll end up taking the short. Momentum's in overbought condition. If we plow through this high, there is room for the upside for this thing to travel a little bit further. That being said, broadly speaking, Chintan, not to knock your trade idea, my man, I'm looking at that same exact setup you're looking at. I would much rather wait for the pullback, okay, into something like here to get long again. But even from a scalp basis, yeah, it's a pretty nice level in price. All right. The next level up would be 42.35 on the break, guys. I just want to bring that up real quick now that we're here on Euro Aus. There's a longer dated trend line that dates all the way back to the lows you made here in 2012 that we've been watching. We've sailed through it a couple of times, but that level coincides right now with the lows from November, right around that 42.30 level, 42.35. Big old range break, okay? Huge move also from a momentum standpoint if we look at this. 37.88 was the initial invalidation to start off. If we remember the scalp report a couple of weeks ago, the break below that put us neutral. The break below this a couple of days back when we were looking at it, man, that looked legit. Okay, and it closed below it. 37.28, 37.17 was the major key support. And then yesterday is what turned everything around. And again, these false breaks are going to happen, but momentum was the tell. Right? 40 hold like a solid slab of steel. You see that? Couldn't get below it. And here we are with a 50 break to the upside. So I'd much rather wait for a pullback here to get on the long side per se, but do like the Euro Aus higher. Okay, I'm not sure why we're getting some of these flashing on the screen, guys. I'm getting people saying that we're still getting that flashing. Yeah, I see that flashing. Hold on with me one moment, guys. I do apologize for the issue here. Hold on one sec. Okay, that should have resolved it. If it doesn't, guys, please give me a heads up on that. I do apologize. All right. Any questions on Euro Aus before we move on? Decent pitchfork on Sterling. Okay, let me get through the setups, guys, and then we'll definitely take all your questions. I see some great pairs. Keep those in mind, and if I don't bring them back, please remind me. Let me just go through the setups real quick here. Terrence says, is the Bloomberg terminal where you were picking up the world currency ranker? Yeah, Terrence. That's Bloomberg Anywhere Professional Grade Services. So just a quick note on that. So for the Aussie, here's what the scalp looks like from yesterday. So we were heading into this region right here. Again, my favorite play has been the Kiwi, so I haven't really taken the short on this one. But in any event, the major key Aussie resistance that we just talked about, 80.67. You saw a turn there, momentum, some divergence into the highs. Again, both signal points above 70, so not reason to take a short, but we were on the lookout for short triggers. Again, the trigger last night was a little tough to take because I was actually watching this, guys. The updates were kind of late last night, if you noticed, but on the break here of the Asia opening range low, the max on the high was 80.20 and the break was 79.80. So it was about a 40 pip stop on the break of the opening range. So I couldn't really get comfortable with trying to short this. The initial targets that we noted yesterday were right down here. First target was 79.37 and the second target was 78.72, 78.80, and we're just a couple of pips away from that right now. On the intraday, okay, the triggers were there. Okay, so here's the Asia Open last night, right? You had a nice trigger break right here. Unfortunately, again, like I said, that trigger break gave us very minimal as far as where your stop would be. It needed to be quite a wider stop than we're looking for in the 27 pips, so I really couldn't justify it trying to take this short. Another trigger panned out in Europe with this move here. And this would have been the operative one that you would have been a little bit more comfortable taking because the spike got you to where the stop could be exactly where you wanted. So this is where the entry would have been on yesterday's Aussie scalp. Nice probe, failure to hold above 50 in momentum, trigger break. At that point, stop against the highs. You're looking for 27, 28 pips per scalp. First level, second level, pending. All right. So if you're holding shorts in the Aussie, watch out. This is where you want to be starting to clean things up as you head into the session here. Bring your stops should be at break even anyway, but if we do attain that 78, 72, 78, 80 target, that's where I would start to again take another quarter, third off the trade. Bring your stops at that point inside, and if you get the downside break, you're basically looking for 78.13 on the Aussie. So let's see if there are any triggers right now for intraday trade. This thing is already on its way. So again, we're not going to chase. It's not something we're going to be ever advocating. That's probably the last trigger you would have seen, and that's on the open of the U.S. opening range. So again, a tough sell on this one. So heading into the U.S. session, what should we expect from the Aussie, Mike? Okay, we can't take a position right now, but what does that mean? Again, look for support here. You have a trigger off the highs. That's a 4-point trigger. It looks pretty good. Maybe not quite 4, but that's there. Topside break there would take you out of any short exposure. Justifying a long bounce here is tough unless we break the opening range high, guys. It's a pretty clean decline here. I'm not going to try to fade this, unless we get a pretty compelling long signal. Any questions on the Aussie? We should be looking for a long now, isn't it, says Raj. So there's a big difference, Raj, between a trade coming into support and you closing out the short than you taking the long, right? We do like the long side of the Aussie on the broader trade. I would be looking for long triggers heading into this region. But like I said, we would need a pretty compelling bounce to go against the daily trend. So if you had an opening range break, if we clear the U.S. opening range to the highs, wait for a pullback, try to get long, play the bounce. But, I'm not going to just buy because we're at support. We need a trigger on the downside here to put us back on the long side for Aussie. As it stands right now, you do have a couple of things to look at. In fact, We might take something here. Remember, it's the last day of the month, so I'm always going to take, on something like today, we're going to take a quarter leverage, what we typically do. But divergence into the lows don't have much of a trigger at all on the long side. I mean, you could probably work with something like that, but guys, that's like a crapshoot. That's not really a compelling trigger because there was no points of reference as highs. So, on a trade like this, you're basically looking at the opening range, guys. You need to break above 79.25. The U.S. futures market's open. And even that's going to be a really, really tough stretch on the stop. So we'll have to see if we can get a little bit more of a compelling bounce off these regions. But, yeah, I do think you can see a little bit of bounce here. I would like this thing to drop into 79.80, 79.72 first. I think that would be a much more compelling trade. Put your stop against the opening range high. You know what I mean? Makes a little more sense to me, Raj, but we'll see. Remember, haven't even opened up the 9 o'clock hour yet. All right, so moving right along to the next trade setup, Kiwi Dollar. This was our featured setup all throughout yesterday. I'm not really a big fan of telling you guys necessarily to fight or try to get aggressive on the event risk, but it was a three-punch combo, triple header. You had GDP, US FOMC, and the RBNZ. We've obviously been hearing Wheeler for the last couple of years, really concerned about the increasing or the appreciation that we're seeing in the Kiwi. Obviously, as a major export economy, stronger Kiwi makes exports less, attractive and definitely weighs on their economy more. So obviously it's in their best interest to keep this down. Jawboning is all he does, okay? He's threatened cuts before, yada, yada. I don't really want to get into all the fundamentals, but the technicals on this thing have been rock solid. If you remember, earlier in the month, as we came into the 77 region, we started to look lower based on the median line confluence off the lows, the October trendline resistance, the monthly pivot, and the nice pivot in price that you've seen irrespective. All of it here. This was a sixth attempt at a breakthrough. No closes. No closes. Okay? So at this point, you've seen momentum completely flatline ahead of 60. These are things that we want to pay attention to. And when we talk about, and you hear me and Jamie talk about the momentum profile, there's a change in behavior. These are the things that we're looking at. And if you look at the momentum profile, you have multiple breaks below 40, multiple breaks below 30, hold at 50, hold at 60. These are all indicative that you don't want to abandon the broader downtrend yet. Okay? Now, the broader downtrend is not in play yet, because obviously we're still in this formation, and we still have this support trigger which hasn't given out. That's going to be the definitive factor for me. But the resistance continues to hold, and our focus against 77 for the last 2 weeks has been well warranted. Here's what the scalp looks like since yesterday. So, there was actually an opportunity to get short right ahead of the FOMC interest rate decision. Again, not going to be someone who's going to advocate that, but when we're trading at a major key resistance and you have a very clear-cut stop, you have a very clear-cut invalidation level, it still made sense to take the position. So, right ahead of the FOMC, I think it was like 2 hours, a short trigger gave out on 5 minute, a short trigger also gave out on the 30 minute. It put us short against the highs of the session. Sometimes luck is better than skill. Obviously, you got some whiplash. It didn't quite make it into the highs, just below. It kept us in, and we kind of faded out of the position on the way down. The rest of the trade didn't actually pan out until the RBNZ came out, and then you got all that rhetoric, from that central bank suggesting that the Kiwi is overappreciated. They will move on the overnight lending rates if they do see, or if it's appropriate, if we continue to see the Kiwi appreciate, and you saw the thing come off a cliff. So again, not going to be always the case where it's perfectly this clean, but was a beautiful trade nonetheless. So at this point, there's a couple of things I just want to point out. Well, let me just point out real quick. There's a couple of pitchforks here. I did add one last night, and it might look kind of messy, but I just want to clarify it for you guys. So the operative pitchfork we were working with yesterday or earlier in the week was this, before the breakout, right? That took us back into 77.33. So that I just wanted to leave because former upper median line parallel is now working as support. But also a broader view has me kind of shifting my attention to this, which is why near term This is the major key support. Aside from it being a basic 786 retracement from the stretch, it's also objectively the weekly opening range low. Okay? So remember, when we talk about these opening ranges, the invalidation level is the break of the opening range lower high. So initially this was an opening range break to the upside. Longs looked pretty good. Major key resistance. We're trying to short against this. The break back below the opening range high. And this is the major key support near term. Nice confluence of median lines. So the risk for the Kiwi is a break lower below 75.80. At that point, you target 75.40 and 74.90. Again, that would be the long side of the dollar, right? So if we do see the dollar index continue on this little bit of a bounce, it's this break here that would validate a continued push lower into the end of the week. It's the last day of the month, guys, so I'm not really trusting. I don't really trust opening range breaks as much, just as a disclaimer. You're really pushing the extreme here into the close of the month, so just use some prudence. Let's look at what the near-term chart says for the 5-minute. Maybe there's an opportunity on Kiwi Dollar. Kiwi. All right, so it looks like the opening range for London is pretty clean. Here's your London low. Here's your Asia low. Here's the... Oh, by the way, here was the trade from yesterday. And there was that trigger, okay? That came at like 11 o'clock, 10:45, right here. This is where we took the short. And why? Again, because you're at a major key resistance. The dollar index was at support. Now remember, this dollar index doesn't necessarily hold the Kiwi, but nonetheless, the dollar rebound was sort of set yesterday. As we came into the print, it was sitting right above support. So for me, a trade like that, where I have a trigger, there's some divergence in price. Price has made a new high. The oscillator made a lower high, followed by a trigger break. As I always tell you guys, 9 times out of 10, I'm going to take that trade. As long as price is at a resistance or a support. So we've been talking about 77.33 all week long. Again, that stop was taken with the stop just against the highs. Literally, we were like pips away from getting stopped out on that last stretch here into 12, and it panned out pretty well. So this doesn't actually have all the exits, guys. There was one exit that was pre-5 o'clock yesterday, so those history trades get deleted. But the first exit was right at the opening range low, or excuse me, right at that initial support. This was the first exit right here at 76.60. Okay. Second exit came out at 76.40, which was this level right here. And then the final trade the rest of the trade got cleaned out at 76.12. I think 76.15 is where I got out, and that was the 618 retracement, right? So right off the bat on its own merits, momentum was right at 40, or right at 30 rather. For me, it's good to dip off the trade. We're looking for about 27 pips per scalp. We ended up taking a really nice chunk on that one. The last lottage was about 104 pips. But you can see how the mentality sort of pans out on how you want to play these trades. Stefan says, did you say stop against the overnight highs? So the stop was against the peak highs, period. And guys, we don't want to always put the stop literally like 1 pip away. Give it a couple of pips. Give yourself a little bit of a cushion. So literally, the high stretch for the 28th was 77.41. I think my stop was at like 77.47 or 45. I gave myself like a 3-pip, 5-pip allowance. And that's just because on a specific trade like this, when you're heading into event risk, you expect the spreads to blow out a little bit, Stefan. So if you go into an event risk with a stop against the high, like really, really tight, it can be very frustrating. I've been that guy who gets stopped out on the spike and then it completely plummets. So when you're heading into event risk, yes, we want to always maintain a 1-to-1 risk reward, but you got to give yourself a little bit of a cushion just to account for, widening in the spread. Does that make sense? Stefan says, got it. All right, cool. So from the standpoint right now, again, prudence is going to pay here on the last day of the month, but this is the opening range so far. The opening range low for Tokyo, London, looks like it's going to be the U.S., is going to be that major key support at 75.80. Okay, so either way you look at it, guys, the invalidation level, break below that, you're looking for 75.40. All right, so that is Kiwi Dollar. Last but not least, on the intraday page, we're going to be looking for the Euro Dollar. This was another one that's pretty wicked where this thing found resistance, guys, on that stretch yesterday. Right in the upper median line parallel. This was what we highlighted in the webinar. If you guys remember yesterday, we just literally threw that circle there as a confluence to the 1155 level, a soft target that we were looking at in the upper median line parallel on the break of the U.S. opening range. A reason why, again, guys, we have to let these ranges play out to give us the validation for the bias. The break right through 110.34. This was the major key resistance. 111, basically into 111.23. We overshot it, then we stuck there like a magnet all through Asia trade. Here's what Aussie dollar looks like, or Euro dollar rather, on the daily. So the major resistance level that we were looking for, 111.23, 111.90 right here, is now near-term support. One thing I do want to just bring your attention to real quick is this median line formation that dates back to the sort of swing highs they made back in 2011, right? You can see that coming through. Got a nice little median break on that. Caught the lows, and now was a nice pivot holding resistance. Literally yesterday's highs blew through it by a little bit, but we closed below it. Today, I think, is the same risk, guys. So I do want to put that out there. I'm not going to try to fade the dollar or the Euro dollar on a day like today, last day of the month, after a 6-day stretch to the upside. But I'm very cognizant of the fact that this is the March highs. This is a long-dated 618 retracement. And it's going to be that median line that we've been looking at, that longer-dated blue one. So I'm very cautious here on the Euro. Momentum at 60. If this is a near-term recovery and the broader downtrend is in view, you'd expect to see resistance here. That's not the game plan, but a pullback here is where I'd like to get back on the long side as opposed to trying to play the pullback. So here's what the Euro dollar looks like heading into the last day of April trade. So that same median line that caught that high yesterday, back in play again. That target that we highlighted yesterday, the pullback didn't come right into support, but you did have a long trigger that gave out right here. Right? Long trigger came out as that held 50. You're trading against the swing low from Europe. That was actually a beautiful entry that panned out right at the beginning of European trade. And again, initial targets 1155, 1124, those are already out. So at this point, again, divergence into the highs. Remember the trigger break that I noted on Wednesday, or Tuesday rather, still in play. We got a little false break here, but it looks like it's breaking. The trigger break in and of itself doesn't mean anything because we haven't broken a level in price. It's really the break back below that 1195 region that I would be a little bit more comfortable calling a near-term turnaround. Either way you look at it, guys, the Euro is in an uptrend, and I don't think anyone should be arguing that at this point. If you're going to try to fade it, this would be the level to fade it at right here. But on the account that it's the last day of the month, I'm very, very, very reluctant to do that. So the levels have been super clear. If it wasn't for the sake of time, I would be much more interested in possibly trying to play the fade on this one. Again, half leverage or a quarter leverage of anything on the way down here as we continue to maintain a topside bias, broadly speaking, for the Euro. Here's what the Euro looks like on the 5-minute. Let's see if there's anything interesting that we can play with. Hmm. 68. That's too big of a trigger. This is probably the one I would have been a little bit more comfortable taking. That trigger break there with a stop against the highs, still pretty wide. Still pretty wide. Yeah, guys, there's probably going to be a chop fest here today as we close out the week. So I'm not going to really stress these intraday triggers as much, but you guys have the levels in view. You're essentially looking for a pullback maybe into tomorrow to actually set up another possible push to the upside, but at the end of the day, we'll be watching price action in the greenback. I do expect that this thing could give us a little bit more upside. And in fact, if you look at this on a near-term chart, here's the dollar index on a 15-minute chart. We don't really typically look at this. I know most of you trading stateside here in the U.S. can't trade this asset, I understand. But again, give us some really clean pictures, a really clean depiction of base dollar movements, as opposed to the ICE index, which is so heavily weighted the euro. But again, there's that low yesterday. And a change in behavior for the momentum signature is what we're looking at on a 15-minute scale even, guys. 15 minutes. Literally. Since, let me just put things in perspective here, since the highs, a break sub 40 changed things, a change of behavior. Now we're looking for 60 to hold as resistance if it's really turning lower. 60 resistance, 30 break. That's bearish. Failure to hold above 60, 30 break. That's bearish. Failure to hold, to even approach 60, 30 break. That's bearish, right? On the pullback here, it can't get through 40, and now we're through 60 for the first time at the highest ATR reading, or the highest RSI reading in days for the week. That's a change in behavior. That's something I want to respect. That's not when I want to start shorting the dollar again, going long euro at this point or anything like that. So, it's the end of the month. I'm going to let this thing simmer. I do think the dollar travels a little bit higher here before you start to move off. All right, so those are the three major scalps that we've been involved in so far over the last couple of days: Aussie, Kiwi, and Euro. Kiwi being the favorite scalp out of those three so far, or at least the most active. Gold, I do want to just touch on gold real quick because the low that this thing hit was to the pip of what we were looking at on the intraday page, and that level was literally 1201. That was the exact low that we came into yesterday before we found a little bit of a support. We talked about it yesterday on the report here. Look, a break lower from here opens up and move into the MLP, which is 1191, and that's what we're approaching right now. Actually, we just went through it, and here's the MLP. So, near-term support. Sorry, guys, I'm losing my voice. Near-term support here for gold, and this is what's going to be the bullish invalidation level. Okay, I just want to bring your attention to this median line formation. Okay, and we kind of noted this yesterday in the piece. That median line dates all the way back to the highs that we made, or off the highs from 2014, September. You've had some major critical inflection points off it. It caught the high back in December. It caught the literal actual March opening range high and the subsequent retest. And on a closed basis, still rock solid resistance. So the fact that we couldn't break, remember the last target on the upside, guys, on Tuesday was 1209. We overshot that, but then this median line literally caught it on the close. So near-term support, a break below this would shift the downside bias back into play, looking for 1173. Again, near-term, no interest in trying to play the short side of gold unless we close below that. If anything, I'd actually like to hold a long getting close into here. If it wasn't the last day of the month, I'd be interested in trying to press that against the lows. Stefan, I don't want you to stress that right now. He says, could you explain the greatest correlations between gold and currency pairs? Is it most relevant to yen pairs, perhaps? Actually, historically speaking, the Aussie dollar has been very strongly correlated with gold. It's one of their largest chief exports. And typically, you'll see those prices move a lot. You'll find those correlations to be helpful during some times, and not during others. For example, Stefan, during the financial crisis, and during the 2008, 2009, the whole debacle, gold in the Aussie was like huge, right? They were almost in lockstep. But then again, a lot of those correlations were strong. Dollar up, gold down, gold up, dollar down was a textbook play for months. For months. I just don't think that's the way you want to be playing the market right here in this environment. The yen does also have a correlation with gold. I know he says Aussie and gold. Okay, I think Jamie may have tweeted that at one time. That's your classic correlation. Aussie Yen, all the Aussie crosses will tend to move pretty good. Stefan says, thanks, I got it. All right. So that's the gold trade. Looking at the charts that were on the radar yesterday, I see some questions on the Aussie Key, and I do want to jump into that because that thing is wicked too. Here's what Aussie Key looked like yesterday. 150.10/20. It's a huge region. It was a 38.2 retracement. There was an upper median line parallel for a current formation that we're in. Major resistance for Aussie Key. Now, if you look at what we saw in price action yesterday, obviously the Kiwi decline way outpaced that of the Aussie, right, by a big time. So you saw this thing run right into this confluence resistance, and that was the focus last night, was against that major key region. Here's what Aussie Kiwi looks like now. Again, not all trades are going to pan out perfectly like this one did, but you want to recognize major key technical levels, and that was just staring at us right in the face. So we're a good 110 pips off that level already. I don't know if you want to necessarily be pressing shorts from this point, but certainly there is warranted some action against that major key region. Here's what it looks like on the 30-minute. All right, and here's what it looked like yesterday on the radar. Okay, so there was that trigger. Took a while for the trigger to actually pan out, but it was accompanied with a break of the European opening range low. Stop against the European opening range high was very tight. Beautiful play. Beautiful play. Again, I'm not awake during this hour, guys, at 3 in the morning here in the United States to try to take these trades, but for those of you trading Europe, this was probably the best setup last night. My man Raj says, I took it. Good man. It was beautiful. It was beautiful. I woke up and the first thing I did was kind of kick myself on that one. Again, you're never going to be able to catch them all, but that's probably the cleanest play that we've seen so far in Aussie Kiwi. It's been a chop fest on the way up. All I wanted to highlight on the radar, and the reason it wasn't on the main page, was because the way up was very, very untidy. It's this major resistance level that we really wanted to highlight, and the play was pretty clean. So beyond here, I do want to just highlight 103.60, which is a former 618 extension, a 1618 extension off the low, but a nice pivot in price. And that comes in right along the median line. So at this point, now that we've reacted to this median line, I'm going to go ahead and lower that target, guys, to this region right here, just above. Oops. Just above that median line. All right. If you're holding short exposure, you have a very clean trigger here as well. Break above that trigger, and you'd want to abandon the short side of the trade. You might see another recovery back into like 104.60, and then we'd look to short it again somewhere around there. Raj says, bang on trade. Right. Well done. Again, you're the one taking the trades, Raj. I'm just pointing out the levels for you, man. Well done. So that is the Aussie Kiwi. Let's look at what the near-term chart for the 5-minute looks for Aussie Kiwi. Maybe we'll have some triggers to take a look at. I'm not sure if I have a scalp even here. Yeah, I'd be hard-pressed to take a short trigger from here. So even if a long trigger does give out, I'd be using that rally to possibly try to press the try to press a push into 103.60. It's important to note, guys, that the broader trade still remains weighted to the upside. We're just playing a rebound off resistance. So the reason I don't want to play a short from here is because you're kind of like 103.86, the former median line resistance, 200-day moving average. From here to initiate new short exposure, I would need a break below here. Otherwise, you want to be looking for support. You want to be looking for possible long triggers heading into that 103.40, 103.60 region. So that is Aussie Key. Really nice play. The other trade from the radar yesterday was Aussie Yen. We've been following it all week long. It got a huge move overnight, kind of went under my nose. I didn't really focus on this one yesterday, but the bottom line is that 95.50 barrier that the long trade was targeting was a huge region. It was confluence of the 200-day moving average, 100% off the low, swing lows from December. You had a lot up there. So here's what Aussie Yen looks like on the daily. Obviously, the pullback here has come right into the median line support. So we want to curb our expectations for further downside from here, and specifically on what the Aussie's doing. You want to be watching the support barrier across the board, but that was the highlighted support that we put on the radar there. So looking for a hold here. If you do get long triggers heading into next week, I still do like the long side of the trade, but again, with where we are at the end of the month, I don't know if we have a play here. Let me see what the intraday charts look like for Aussie Key. I haven't checked this out yet today. All right, so here was that support trigger we talked about, or the support objective we talked about yesterday, 95.40. So this was actually the initial, let me take that back. The initial breakout level was 95.50 that we were looking to attain. It overshot that, right, and came right into the upper median line parallel. This is what we highlighted yesterday in the webinar. And on that rally, again, same setup you saw in all the other Aussie crosses that we've been looking at. In fact, you had divergence into the highs, again, above 30, above 70 rather, not a very strong signal, but it was followed by a multi-touch support trigger break against major key resistance. Okay, so at this point, we've come back into 95.50. There's 95.50. That support barrier has given out. And below that, and this is where the median lines, which might seem kind of messy here, start to come into play. So you see that median line off the low, guys? That's the operative one we've been working at. We broke the embedded one, and look where the support came in, right at that same median line. And that's the one we're looking at on the daily chart, right? So broadly speaking, could get a bounce from here. The broader trade remains constructive above, I think the invalidation level is 93.80 if I'm not mistaken. Yes, 93.80. And why 93.80? Objectively, it's just the opening range high for the week. And this is what gave us the long bias. This is the breakout level. That's what's going to invalidate the long bias. That's what's going to invalidate the breakout level. Make sense, guys? Stefan has a question here. It says, just back to setting stops. When you go a bit above a high, Kiwi Dollar yesterday, are we talking 5 pips or a certain number? Yeah, Stefan, sometimes it's luck, man, to be quite honest with you. I typically will put a 5 pip range just out of comfort. If we're heading into event risk, I really just try to see if there's any slope. Let me go back to that one. I want to make sure I clear up your question here. It's a very good question, and there's no right answer. There's no right answer. I can tell you to put a 5 pip allowance cushion, and it could get stopped out. I can tell you to put a 10, and it might get stopped out. I don't know, Stefan. But when we're looking at a trade like this, right, where we've had clear-cut conviction, the actual highs is usually what I'll put the stop against. So even on this stretch here when we took that short, the high, the actual max high was 77.39. So you put a stop 77.47, 77.48. I don't, that's completely discretionary. Yeah, it's an art, not a science. Thank you, Stefan. You said the words out of my mouth, right? We could have easily gotten stopped out on that trade yesterday, easily. If the spreads blew out by 3 more pips, we probably would have been stopped out. And sometimes luck is better than skill. You'll hear traders say that all the time. I'll tell you what, even if I did get stopped out on a spike like that, and the data came out the way it did, and the reaction came out the way it did, I got no problem jumping right back in. There's a difference between being stubborn and trying to press a trade that's going against you from recognizing that maybe I was playing it too close to the chest on this one, right? Event risk, spreads are going to blow out. Yeah, maybe I should have put that stop a little bit further out. But I don't advocate you doing that too much, okay? The reason, and again, I'm trying to walk you through the reasoning, is because of the fact that we're heading into a major event risk, right? That being said, 3, 4, 5 pips max is what I'll do against the highs, and we'll let it play out. But event risk, you got to change your mentality. You got to change your mentality completely because you don't want to be having to make decisions when the market is spiking up 30 pips against you or behind you. You want those decisions set in your head already. Does that make sense, Stefan? I hope I'm not losing anyone. Stefan says, I got stopped out, so I'm very curious. Okay. Okay. Well, I hope that offers some clarity, Stefan. Let me know if there's something else or something I might have missed there that you have a question on. So Kiwi looks like it wants to make another run. He says, totally get it. It's experience. Yeah, I'd have to agree with that 100%. Most of trading is. So we'll see if that 75.80 level holds. Opening range low for Kiwi here. Yeah, my only problem with this is the stop, guys. My only problem is the stop. If you see the break, there's just nowhere for us to put a stop at a decent range. Let me see Kiwi again. Yeah, I'm not going to press it here, but certainly looks pretty compelling. All right, we only have a couple of minutes left. I'm not going to forget anyone's question. It's the last webinar of the week. I will get them all. So let me run through these real quick. Euro Aus we covered. I saw a question here on Kiwi Yen. Chintan says that Kiwi Yen break of the weekly opening range low, short on the bounce. It should be in our watch list, Mike. Kiwi Yen. Let's take a look. Should be soon. It's nothing for me here, Raj. That's as chop fest as it gets. I'm not going to be really a fan of trading a pair that gives you quite that much back and forth in the same range. The first thing I look at, guys, when we take a look at the trade is just the structure of it. Have we been respecting some slopes? Have we been getting clean opening range breaks? This is probably one of the messiest trades this month. You got to stretch high. We tested the opening range low. We broke the opening range high, came back into the open. I mean, I do think it turns over, don't get me wrong, but on this trade I'm not really a fan. Why? Because I think that the yen weakness story and the Kiwi weakness story can play in tandem, and that's why you're getting this, right? Aussie yen rally, that's right, that's yen weakness. So Kiwi short, that's yen long. It's kind of like going against the grain, right? And if they both end up being weak, you can get a whole bunch of this. So right off the bat from the daily chart, it's not really the sexiest picture. I'm kind of gonna stand back. But you know what? Maybe the intraday does have some clarity. So let's dig down deeper. 30-minute. Looks like it had some clean structure on the ascent there. Not bad. But since the start of the week, and here is your weekly open. It's actually very similar to the Kiwi Dollar setup. You stretched into it, and here you are testing the opening range low. That held. Yeah, I would say there's a change in behavior. I would say there's a change in behavior here, and you do want to broadly look lower. I just don't have any conviction on actually taking a position with these levels. Not here. Not here. Let's say if we get back below 90, this major key confluence or major key inflection point. Right, caught the lows, break, resistance, break, support, resistance, resistance, support, support, break, support. And it's the opening range low. So would I want to short into it? Nah. I'd want to wait till that breaks, then short against it. or wait till we see another rally into this into the highs. Maybe there's a formation here we can work with. Actually, that doesn't look all that bad. Maybe something like this, Chenton, would be a lot more, maybe a lot more attractive for me. We should be looking for a long now, is it? So Raj, you know, the questions you're asking are oh, I'm sorry, I think I just saw a question that was out of date. You were looking for the short side of this, right? Yeah, we would need to get out the downside of this trade. If it's not inherent to you guys, where you're looking at the intraday and daily and your bias is not popping out in your face, look somewhere else. There's so many setups across the board that a lot of times we fall in love like a pair. I said this yesterday, and we kind of just want to press a trade on it. Maybe that's not the best interest for you. You know what I mean? Again, guys, we want to try to filter out. It's very hard. We want to try to filter out any emotions when you're trading. It needs to be completely objectively about what price is doing. That's it. That's it. So not really on my menu, Kiwi Yen, but an interesting pair nonetheless, Raj. Hope that helps. Sterling Key, Permendra, not going anywhere until I get you that. Here's what Sterling Key looks like on the daily. All right. Let me take a step back here. Why is this off? Oh, I'm not sure why that's moved. There we go. Sorry about that. Okay. Interesting. I'd want to be long. I'd want to be long from like here. I don't think there's much of a play from this juncture. You look for a possible pullback, but initial support, I really wouldn't even stress this this trend line anymore. Let me get rid of that. Let's see what near-term price is doing. Sterling Key. And again, guys, I'm just going completely off the cuff here. I do not have anything per se prepared for this one. Okay, so this retracement's null and void. We made it through that. Yeah, you're at risk for a near-term recovery, I think, if it breaks sub 2002.40, this region here. So here's your opening range low for Asia. Here's your opening range low for Europe. Here's your opening range low so far for the United States. A downside break. You possibly look for a move back into like 201.30, 201.40, the former upper median line parallel. It looks like a trigger did give out here off the lows. Okay, on some divergence. So if anything, sort of that would have been the short right there against the highs. Honestly, I still wouldn't have taken it just because of where you are. I don't have any key thresholds above that except for the except for that 618 that we saw on the daily chart. Again, you know, I'm not really a fan, guys, of trying to fade these big moves right in the back of data. It's always, you know, you could get a scenario like this where it's a weak pullback and then a push right through. Or you can get a scenario like Aussie Kiwi where it spikes into the high and then puts in a doji 100 pips less. And it's the last day of the month, guys. So let's keep things prudent. The exotics, just for your information, the exotics on the Kiwi and the sterling and those with the wider spreads and the bigger ATRs, on days like the end of the month, those specifically are the ones that are going to be most hairy as far as the triggers, intraday price action, and whatnot. So I see that there's a lot of questions on sterling, yen, euro crosses too. Those are the ones that you want to stay away from the most, in my humble opinion. That being said, sterling key, yeah, I think you're at risk for a pullback here. I think you inevitably buy it. But look for a downside target at 201.40, 200.80, 560. This is going to be the bigger region, just on account of the break of, well, I stand corrected. The opening range high just a little bit lower, than that region for the week. That's kind of what would validate a near-term breakdown, but I think you want to be looking higher in this pair. In general, the sterling to me is not something I'm interested necessarily in trying to press the short side anymore. And let me just check out one other thing here, guys. That could be also the operative slope in play here. All right. I think I got all your questions. Raj is talking about dollar yen. I did see some questions on dollar yen as well. Well. Looks like yen wants to make a move here. So as we head into the U.S. session, by the way, ding, 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 you might have just heard, that was the U.S. Open. Outside reversal candle here on dollar yen, ripping to the upside. Breaks. Okay. So you guys remember we highlighted this opening range on Tuesday. We didn't look at it yesterday. Here we are. Couple of dribbles below the opening range, didn't hold despite all the dollar weakness that you saw yesterday and the huge sell-off into support. This thing couldn't give you any downside. Again, one of the reasons I don't really want to be aggressively long the yen. Yesterday's price action was a tell. It was a tell. So, even on the dips into 40 here, really short-lived. And here's the break of the weekly opening range high. So, yeah, look for the dollar recovery to possibly give us some more. Keep your eye on the dollar index, guys, heading into the end of the session. Again, we are traveling higher. 11,008. 55 is the bottom of the resistance range, and that's going to be the close highs for January, the close highs for February, the 2009 high, all come around 80.50, 80.55. It's actually 8.54 to be exact. And then 11,880 is the actual stretch high, and that's going to be the top of the resistance range. So wouldn't be surprised if we do see dollar give us a little bit of that move into that resistance near term. All right. I'm going to end it there. I think I got everyone's questions. If you have any other questions, feel free to throw them out on the board. Otherwise, oh, Raj, Aussie CAD. Sorry. Aussie CAD. Wow, look at that 100-day moving average at play. Whew. Yeah, again, another exotic I have no interest in right now at the last day of the month. You're at support. That's all I got to say on this one. Watch 95, 94, 90. This is a multi-year trendline support we've been watching for quite some time. Yeah, we've dribbled around it, but on a closed basis, it's actually been a ridiculous pivot. You see that? Support, support, break, resistance, break, support. It's pretty wicked, and that comes in just around 95, 94, 95, 95 handle. Don't really look for any, I'm not looking for any short exposure beyond that. In fact, that's going to be my near-term bullish invalidation level. So, keep that in mind. All right, for real this time. We're going to end it here, guys. Have a great weekend. I will see you guys bright and early on Monday morning on Daily FX for the public webinar, and then Tuesday, Wednesday, and Thursday of next week. I stand corrected. I will actually be traveling Wednesday and Thursday and Friday of next week, guys. I'll be out of the country, so I'm not sure we're going to have too many scalp updates, but I will give you an update in the beginning of the week. We'll try to set things up so that you have all that as you head into the latter part of next week. That being said, have a great trading day. Take it easy. Last day of the month. Tomorrow is the first day of next month, obviously. But on this switchover, just use some prudence. If you're going to be intraday trading, lower the leverage a little bit. Maybe not get as overzealous on the targets. But it's time for prudence as far as trading in these conditions. Guys, have a great day. Last time. I'll see you guys next week. Cheers.